We are live. It is another day closer to the X date. We have very little progress being made toward the debt ceiling, and markets are starting to respond in kind. We're going to talk about all of that, as well as where we feel most comfortable parking our money this summer. As we get going, please hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice. We're not financial advisors. We're a few guys who love following the markets, looking at the macro, trying to dissect this whole crazy puzzle that we're putting together here. So as we get going into that, I think we do your own research, yada yada yada, all that good stuff before making any buys and sells. Kev, McCarthy and Biden met yesterday. No real progress was made. Their aides have been meeting again today. McCarthy said in a closed door session with Republicans, this is according to a Bloomberg report, that there's not like they still haven't gotten too much further into it. There's still this big impasse around spending. Republicans want to cut back on spending. Democrats do not. And we're spending more than our GDP right now, which is not a good thing. So there's a lot of just murkiness at this point. And for a while, markets really didn't seem to care. They were still going up, but that changed today. We're seeing moves down across all the major indices. The Dow is down about 0.6%, NASDAQ down 1.2%, S&P down 1%. We see the dollar having a strong day. The VIX is finally climbing up on fears around volatility. We're still sub 20. I don't expect that to last. I think we're going back north of 20 again, and we're seeing treasuries have a good day. If you're willing to bet that this gets resolved, short-term treasuries are also a good bet at this point. We're going to get into more of that down later in the show. But how are you feeling about everything? Just remove your general bearishness. All right. But how are you feeling about everything overall as we sit here today? Also, good to see you, Ace. Welcome to the show.
Thanks for being here, Ace. It's definitely looking at the markets. It's been boring until we've seen a little bit of red today. But for the most part, there's a lot of stuff going on. There's a lot of noise. There's a lot of uncertainty. Yeah, I mean, this is a pretty good explanation of what it really is going on. The government is absolutely in a circus right now. And we're getting conflicting, details from McCarthy and Biden on, oh, no, we're sure something will get done soon. We haven't made any progress, but we're sure that everything will be resolved by the date. It's that type of mentality. So, again, it's nothing. I'm not stressed or anything about what's coming. Again, I lean bearish, probably. I think everyone knows that. But in terms of just looking at the markets for what they are, I think the technicals and there's a lot of indicators up there currently, such as the dollar, and we're seeing some of these patterns finally starting to retest the lower trend lines, kind of tell you that a move is on the way. I think a big move is on the way, but it's just a matter of time. And I think that right now we're just dealing with a lot of noise, and we just kind of need to step back and take a big picture look at, okay, how much have we climbed in the past 6 months, and where are we most likely going into a summer of low volume? That's literally the approach I'm taking.
Yeah, I think we're beginning to see, and maybe it took longer than I expected, but we're beginning to see the sell in May and go away situation, right? Like,
Yeah.
Memorial Day weekend is coming up. People traditionally go risk off heading into long weekend, so you got to assume people are going to be closing their long positions heading into the weekend, especially if there's no resolution on the debt ceiling.
Yeah.
Like, come Friday, if there's no debt ceiling resolution and people are going to be closing out their positions and going risk off heading into a long weekend, it could be a very red Friday. Like, I am preparing myself for that. If in the case of no debt ceiling deal. So I think you have to be mindful of that situation. We had a little bit of data come out today around new home sales that came in strong. We had another Fed president speaking. Nothing too eventful there. Tomorrow we have GDP data. That's on Thursday. Tomorrow we have May FOMC minutes. We have NVIDIA reporting earnings after the close. So I'm looking forward to that. So really, until Friday, Friday's the big day, because there's also inflation data on Friday too. It's setting up to be a perfect storm of the markets having a sell-off to close out the week, to begin to wrap up the month as we head into the summer months, where, like you said, volume is low, people are doing other things, and I think it's a really good opportunity this year for people to maybe take a step back and find some places to park their money. We'll talk about that here in a little bit, but that's kind of what I'm thinking as we move toward the weekend. Be eyeing the debt ceiling. There's some Republicans who are saying that, oh, this isn't a big deal. We're going to get it figured out. Like we're not going to default. But once again, there is the credit rating part of it.
Yep,
And
that's exactly
the
it.
closer we move, the closer we can get to being a decrease in the credit rating. So something to be mindful of there.
Yeah, that's honestly, I think that's probably the most important thing, because again, everyone thinks like, oh, a resolution is a good thing. A resolution that happens a little too late or a little too close to the deadline, that's not always a good thing. We saw that in 2011, right? That was the summer crash where it dropped 20%. You brought it up last week, and that could easily happen again this time around. I think that's most likely probably like a 50-50 shot that happens. There's a good possibility that happens. And again, I think McCarthy said it best, even though I'm really not taking sides with either party, but it's like, we have a spending issue in the United States, right? We're spending more than we're currently making. If any human were to do that with their own personal finances, that's just a recipe for disaster, right? So, I mean, you can give some,
What do you mean? What do you mean if there are a lot of people doing
well,
that, and we're seeing that
we
play
have
out
tons of,
in a
right.
big way, right?
I'm using a hypothetical person here, but yes, absolutely. People are irresponsible with their finances, and clearly the government is made up of a bunch of people that are absolutely incapable of, spending millions, billions, trillions of dollars of taxpayer money and GDP growth. So, it's we're all alike in some ways, and when it comes to debt, we're more alike than we're different. So let's put that as a positive note. We're all going to default.
Well, not all of us.
No, no,
Not
no,
all of
not
us.
not us,
Just
not
the
anyone that
government.
watches the show. Yeah, but everyone else, yeah, for
I
sure.
hope so. I hope no one. Yeah, I hope no one that watches this show. Okay. So as we head into the end of May, we got a long weekend coming up. Markets will be closed Monday. Out at barbecues, eating some hot dogs. Maybe you're going for the Costco hot dogs this year because the organic grass-fed beef ones might be a little too pricey in this economy. Where are you looking? If you have cash on hand, and for those who, I know that you're an active trader. You're more active than I am. Are there any areas that you would feel comfortable just parking your money if you're like, what, I don't want to worry about it. I want to enjoy my summer. I want to come back at the end, around Labor Day, have cash to deploy then. Where would you be looking to park your money right now?
Uh, Summer's coming around. It's getting pretty hot outside. I'm a big fan of shorts. I think short positions, honestly, are probably going to be where I'm going to be holding my positions. But again, we really need to see some price action in the markets before I make that decision. But I feel that we're in a place where currently I'm holding a short position. But if I feel like that's the place where I can make the most money, I'm definitely going to do that. I might do low leverage because, again, I mean, obviously, I'm going to do low leverage. That's the way that you don't have to worry about anything. You kind of just have your money there, wait for the market to come to you, and then it's a little less stressful position to be holding. But again, if we do get resolution on the debt ceiling, and obviously the worst thing that happens is the credit rating. Treasuries short term, I don't think that's necessarily a bad idea too. Make some money while you can. Anything short term, in my opinion, is probably the best bet, just because I do think that the bigger crash is coming later in the year. Um, I mean, again, that's just the mindset I'm having. I'm thinking my timeline is very similar to 2008 for the time being, but I think that we are going to see Q3, Q4 be pretty negative quarters for pretty much everyone, whether it's the markets or the economy in general. But I do think that short-term treasuries, if the debt ceiling does get resolved, isn't a bad idea. Again, I'm not telling you to do that, but for me personally, my focus is just going to be on the short positions. And if we do get to a point where we do hit some support and we're holding some support, might go low leverage long just to make some money back and forth. But I'm not going to mess too much going long with anything other than Bitcoin. I think Bitcoin is the one to watch, the one to follow. The price is going to go up. Everything else is going to react to it. With alts, you might see some pretty good gains in some areas, but for me, the safest place if I'm going to be going long would be Bitcoin in the summer. But again, I would like to see us crash or finish the structure that we're currently at before we start getting some of that recovery, before I start moving money into like other assets.
Yeah, I'm also right there with you. Looking, the 3 month treasury is at about 5.35%. I know for people who are in crypto, there's nothing sexy about bonds about a 5.35%. But excuse me, let's look at the setup heading into the summer. Okay, so we have debt at all-time highs. We got this,
Yeah,
and let's remove the debt ceiling stuff. Let's assume that
sure.
that gets resolved. If not this week, next week, or the week after. Okay, we got the summer months ahead. Volume is low. We have debt at all-time highs for a lot of people. We have inflation that is remaining very sticky. We have a strong labor market that is giving the Fed headaches. We have a Fed meeting coming up in June, middle of June, and we're currently at about a 2-to-1 chance of no hike versus 25 basis points. I think that number is going to keep creeping up, and we're going to eventually get a 25 basis point hike in June. That's just my feeling on it. We got another meeting in July, and then people are under the assumption that we're going to start seeing potential rate cuts as soon as September. I am not one of those people unless something breaks terribly in the economy, which would obviously be very bad. So I think there is plenty of reason to feel comfortable putting if you got cash on hand that you don't really want to worry about being active with, and you just want to come back in 3 months and have a little bit more cash on hand, I think that a 3-month treasury is just fine,
Oh,
right?
absolutely.
Like, it doesn't matter if you're making, a few $100 or a few $1,000, whatever, but being able to lock in that 5.35% for 3 months and not have to worry about it, I think is a-okay. Getting out there, enjoying your life, not stressing about the markets, not having, still watch our show, obviously, because we
Yeah.
want everyone to watch our show, but to have to worry about what's going on in the markets less, if you have cash that you want to put out there, just go put it in a 3 month. It's fine. Like, you're not going to lose your money there. You're not going to have to worry about fluctuations. If the market dumps, that's great for you, because when you get your money, you're going to be able to buy at a cheaper price.
Exactly.
So I think that right now, like, having, whether you want to be 60% equities, 40% bonds, 50-50, 40-60, whatever, but having some money in fixed income at this point, just so you don't have to worry about it, is probably a very, very smart move.
Yeah, I couldn't agree more. And again, we're going into this is the last month of Q2 coming in, right? June is. And we're looking at, say, a 3-month treasury from June to September. Then we start going into Q3, Q4. Obviously, that's around the timeline that, if we were looking back in 2008, that's when the market finally did break. Is that what's going to happen here? Who knows? The structures that I'm seeing in some of these, some of these stocks and some of these crypto assets seem like that we're going to see more downside over the long term, but there is going to be a recovery. So this might not be a bad time, in general, just to make some easy, not easy money. Well, it is easy money. You just can't spend it, right? You can't move it. Otherwise you lose it, or you pay a penalty or whatever it is when you sell early. If whatever you do, if it's similar to SIVB, right? What they did, and they lost a bunch of money. But if you're smarter than them, then obviously it's some money, and the market might be at a point where, okay, the little relief rally that we got from whatever crash that we saw early in June, which potentially might happen, or maybe this is it, who knows. But this could be a good opportunity to have cash on hand, a little bit extra, more than you had to start with, and be ready to buy some cheap assets. Like what you
Yep.
said, I completely agree with that. That's probably the most conservative and smart thing you could potentially be doing.
Yeah, this is a game we're playing here, right? Like, there's times to be aggressive, and there's times to let, things come to you. And right now, letting a small return come to you, while things are very volatile, and we have like, right now, this market is constantly changing, right? Like, for most of the last 13, 14 months, it's been data dependent. Now we're in this, like, small phase here where everything is headline dependent, right? Like, the latest headlines around the debt ceiling. Once this is resolved, I'm under the belief we go back into the data dependent side of things, where everything is focused on inflation and what the Fed is going to do with rates. And that's just in the US. You also have the headline risk of everything going on, globally too. So right now we're at a point where, like, the fundamentals don't really matter as much. It's about what is happening, and so much of that is beyond our control. And so if you can put your money into something that you don't need to worry about it being impacted by, the headlines and by the data, and you can just kind of, take a step back while other people might be stressing about it, that's probably best, for your financial and mental health.
Yeah, I couldn't agree more. And again, we don't talk about this often, but this game is rigged. Let's be honest with you, by each other. We know the game is rigged, but if you know how to play the game and make the right decisions, make the smart decisions the way it's supposed to be played, you're going to come out on top 99.9% of the times. But Bundy, thank you for joining us.
Appreciate it, Bundy.
It's just just be smart. That don't go balls to the wall like in some of these shit coins that we saw recently. Like, just because it's shiny and people are making a lot of money, it doesn't mean it's going to be the most sustainable long term. Protect your wealth. That's the most important thing you need to be doing right now.
Yeah, you say, you bring that up, which is a good point. That it's a game that is the deck is stacked against you. So really, at this point, it's not making the mistakes that other people are going to make. And one
Exactly.
of the biggest mistakes that the market makers want you to make is to buy in when really there's no reason to do so. They want
Yep.
you to feel, that's I think part of why I think there was a combination of things were oversold, but at the same time, prices wanted to get pumped up to get more, more retail investors like us in. And so don't play their game. Sometimes the best way to win the game is just to not play it. Right.
Exactly.
So do not get tricked into it. Let it come to you. Be patient for the love of God. I know that everyone wants everything right away, but just be patient. Let this stuff play out. If you have your bets placed, like I don't want to pretend like I'm not still holding stocks. I definitely am. But a big part of the reason for that is it's stuff that I've bought, that was bought a long time ago, and I don't want to pay taxes on it. I just
Right.
don't want to deal with that. And I'm just going to let it sit, and I'm confident in what I'm holding that it's going to continue to grow over time. So, I'm not saying you should go out and sell your equities and create tax liabilities and deal with all that. But, hopefully you're in a position where you can, continue to grow your cash positions and your savings. And I mean, hell, if you want to even not worry about the treasuries, you get, take advantage of that 4.15% savings account from Apple or whatever.
Yeah,
Like
true.
get yourself an Apple credit card. Obviously don't carry a balance on there, but get cash back there, let it go into that. Cause I believe I looked into it the other day. If you want to take advantage of that 4.15%, you have to have the Apple card first, and
Yeah.
then you can move money from an external account into that savings account. You can't just open a savings account through Apple. So, if you're looking for a credit card, that's a good one to have, because then you get access. You not only get the 1% back or whatever, but you also then get access to a pretty high yield savings account that I think is another great place to be. Where if you can be getting cash back and then it's going to accumulate 4.15% on top of that, pretty good.
Yeah, absolutely. And again, summer's right here. If you're in the US, obviously, if you're in the southern hemisphere, I'm sorry it's cold down there. But for the most part right now, it's like second jobs. Just get find some jobs that you can do, get some cash flow in too. Like that's not a bad way to play this game either. Like if you just want to, spend some time doing a couple of, side jobs, or if you want to pick up night shifts, stuff like that. That's personally, that's what I've been doing for the past 2 years, just because again, I think that having cash flow is one of the most important underrated things that you could potentially be doing. And I think that doing that has definitely given me a lot of power when, times where people who are buying the top or aren't able to necessarily buy the bottom, and that's when I get into some long positions. So it's been very beneficial just to make sure that I have cash on hand at all times. And if you're willing to sacrifice some time, some of your body for doing some hard work, I didn't mean that in a bad way. I meant like, construction and stuff like that. I'm not telling you to go work the streets selling dime bags or anything like that. But for the most part, it's just, just hard work, hustling, and then just make sure that you have cash on hand, because the dollar we see today, extremely strong. I honestly expect the dollar to be coming down, but right now the thing is absolutely kicking ass. And, for me, having cash on hand is absolutely not a bad play, and it's been working pretty well.
Yeah, this is the least sexy advice possible, but it's just, and this is why you and I we're terrible YouTubers, right?
Yeah,
Because
exactly.
we're not moon boys. We're not trying to tell everyone that everything's sunshine and rainbows. Ace is 100% correct there, but it's true. Like, sacrifice some time, sacrifice cutting back on some expenses, because doing that now and being able to accumulate assets is going to pay off down the road, and that is very, very important.
Yeah, definitely. Yeah, that's all I got. What should we do next? Should we dive into some stocks, look into some assets?
I think we should. A lot of the stuff we talked. So if you watched yesterday, we kind of talked about how it didn't make sense that a lot of these tech stocks were pumping. Well, guess what? They're coming right back down.
That's true.
Losing as much as they gained yesterday, if not more. So that shouldn't be surprising in the least bit. Are there any ones? The VIX just took a nice little pop. You love to see that. Closing in on 19. Are there any stocks, looking through the charts, that jumped out at you that you want to touch on?
Oh hell yeah! I talk about this one all the time. Marsh McLennan, MMC. This is one that I was saying if it got to 183, you'd see a harsh rejection, and then we'd probably see eventual breakdown from there. Well, we got to 183, and look at that red candle we got today. We're down 3.24%. We hit at 173 from 183, where this was the target we were wanting to hit. It's down about $9 currently. So again,
Can you,
it's
real quick, can you remind everyone what this company is and why, I know this was one of the, we did a show a while back where we talked about like, kind of the area you were looking at shorting, but just do a
yeah.
quick recap for anyone who's new.
So it comprises of three companies, but majority of it is consultancy and finding job talent and a lot of job solutions. Basically, a bunch of keywords that we saw, positions that opened up in the past 15 years where people with degrees were able to get paid a good amount of money, and it's pretty much a huge industry where people are being overpaid for the amount of work that that's actually being done. So I hate to break it down that way, but it's a company that does consultancy and they have a bunch of other companies within it. But it's just one that I saw in the charts that made no sense at all for how much this thing has rallied since 2008. Like I have to go to the all time just so we can pull it up. But look at that. I mean, this is insane. Like it has not seen a bear market. COVID was the closest thing that it came to a bear market, and it kept on rallying and kept on rallying. And here we are now at $174. We hit resistance up here. Has not seen the effects of a bear market, in my opinion. And the bad thing is, if a lot of companies start cutting back, they're not going to be leveraging any of their third party firms or anything like that to help them do work in terms of marketing consultancy. And they're probably going to, just cut back on that. They're going to wait till the people are spending money once again. And we're in a market where people are willing to spend money. Right now, a lot of people just have debt. And that doesn't do very good if people can't pay their bills. So for what I'm seeing right now, this seems like one that's definitely going to see some negative downside. And again, just from a technical analysis point, we got a huge gap right here. And we're seeing what this is a bear flag. Obviously, this is higher highs and higher lows. We got rejected at the higher end here. Again, we got rejected at this point here too. So this seems like this was going to be the trend line that was going to keep us from going above. If we could break above it, maybe this pattern played out a little bit longer. But for the time being, I see this as getting rejected pretty nasty. I know the monthly stochastic RSI is pretty low. However, if we look at the weekly, we're coming down, right? And then we can see the volumes are falling down just a little bit. We've had massive weeks. Like, look at this from SIVB all the way till, let's say, even here last, so May 8th of this month. Just an absolute rally. We're going to have to test this lower trend line. That's probably around 157. If we lose that, we're going to come down to probably the 200 EMA, which is around 140. If you lose that, then obviously you're going to have to find some key support, which would be right around 120. So there's definitely a move in this one, and I've not seen too many people talk about it. I think that we are going to fill those gaps, those massive gaps that we've created on, let's see, the monthly. You can see it better on the monthly. Like, this is a huge jump in price action. I do think that it's going to have to come down on the other side, and it's going to have to find some support in this range. Worst case scenario, obviously, is the COVID low, but this is one that I think is on the verge of breaking down. Again, we were talking about how 31,000 for Bitcoin was the top. Once we got that rejection, we'll have to watch this one play out over the next few weeks, how this goes on the weekly and then going into next week. If we get to that 157 and we break below that, then I think that we are on a trend to the downside, and then we're going to start seeing some negative price action for this stock. And again, this one mainly because how insane this chart is. I know I'm not crazy looking at this, but that's a pretty big ripper compared to where it was in 2008, which was right around here at $15. It is currently 174.
Okay. Yeah, I think and I want to see this one play out more. I think that you're onto something here. Any other ones that jump out at you? I know crypto is still kind of,
Yeah.
it took a nice little leg up, but still just kind of like hanging out in this range. Bitcoin just over 27, ETH in the mid 1800s. Any other ones you want to look at before we wrap it up today?
Let's take a look at NVIDIA. I want to take a look at that one, see if there's any patterns what the heck? Look at that monthly, man. I know we talked about this the other day, but look at that monthly. And just look at this absolute, look how fast it also climbed to the monthly stochastic RSI. So I'm looking at this. Definitely, if I was in a position to be shorting, this would be one that I'm looking at. Here, if I'm willing to take a little bit of potential push to the upside. I do think that if we were to push up that 344 right up here, obviously that's the height that we hit. But that would be a double top, and that's pretty bearish because that means that's resistance. And if we lose that, we'd have to find support at the next level. Probably would mean that we lose the 50 as well. Probably have to test the 200, which is what, 165. Again, I don't anticipate that being overnight, but we could see some negative weeks where we get at least to the 50, which is around 216. I'm not trying to, be an a-hole to any NVIDIA holders. I do think that this one is definitely going to be coming down. We're seeing 50 and the 200 here. If we do get below the 50, obviously that's going to be coming down. You could get a death cross. I'm not seeing one right now, but I definitely see a structure that is completely unsustainable with just how much it's moved. Like, I could actually chart this with Elliott wave theory. Let's do that real quick. Let's get some
as your local NVIDIA bull. We do have earnings tomorrow, so I think that could lead to, and I think they're going to be strong earnings. So I think we could see upside potential there if you are looking as an opportunity to open a short position.
Absolutely. I mean,
let it rip up after the close. Going into Thursday, and then we could see if that, like, there could be we could see upside with earnings, and then downside with everything else coming down if we get bad news. If it gets overbought further, and then if we get bad, nothing new around the debt ceiling, like, that could be the perfect storm for a short position. But I don't do that kind of stuff. I'm not telling anyone else to.
Definitely, yeah. I'm not telling anyone to go short on any of these. MMC, I think that 183 was a pretty good level to short. I didn't have a position on it, but it's definitely one that I'm keeping an eye on because I do think there's going to be negative price action. But when I look at NVIDIA right here, I put up a 5-wave move here. There might be within the structure, but then I was looking down here, and this is a 5-wave move to the downside over here. So this might just be a 3-wave corrective structure, but it's irregular, meaning we have an overextension on the C wave to the upside, which it'll be interesting to see how this plays out. But if it goes 5-3-5, most likely it's going to be a 5-wave move to the downside. Where this takes us, I have no idea. This is going to be solely dependent on how this reacts to this level, or if it breaks from here. But I do think that we are going to be putting in something closer to this 200. I would think the 200 would be a pretty good area. Let's see. Where was COVID? Where did COVID drop this? Right here. That was at $45. Again, I don't know if I'm that bearish. I am bearish on the market in general, but it'll be interesting to see. I think that, getting closer to that $100 for NVIDIA isn't impossible. I think that's pretty conservative, but, that's a huge drop from where we're currently, maybe 60%. It'll be interesting to see. Let's see this 116, maybe a double bottom here at 106, or maybe we just find some support around here. But I think this is absolutely unsustainable how much it's pushed up, and I think that there's going to be some liquidity drawn from this price movement on the macro. So we'll see, but does not look optimistic from this point onwards. I think there's more potential downside risk than potential upside risk. Upside potential, yeah.
Okay, I think that is a good place for us to wrap it up today. We'll be back tomorrow, same time, or no, not same time. Not same place, or same place, not same time. Kevin and I got to figure some stuff out. He's traveling for work, but we will get a video out tomorrow. Like I said, we have May FOMC minutes. We got NVIDIA earnings. We got Fed Governor Waller speaking. We're going to have hopefully more news around the debt ceiling, how the markets are responding, all that good stuff. So appreciate everybody for watching. If you have not yet, down below, there are some buttons. We need help with those. There's a like, subscribe, drop a comment. And the big one, the granddaddy of them all, is sharing us out on social media. That means a ton. Kevin's getting involved in the hand signals now. It's a whole thing that we're doing. So appreciate any help you guys can give us there. If you enjoy our show, that means a ton to us. So thank you everybody for watching. We'll be back. Have a great day. Take care.
Thank you, everyone.